We are cautiously optimistic in terms of the economic growth outlook globally. And so we're looking for decent growth in the US, in Europe, in China and elsewhere. But what makes us a little more cautious there is valuations, the likelihood that global liquidity may tighten a little bit, and also, of course, the inevitable political risk that we see around the world.
One of your main areas of investing has been non-banking financial services. How will you go on with that, and does it mean you are going to reduce your exposure to Chinese banks?
Look, we remain very comfortable with our holdings of the China banks. And when we look at China more generally, let me say two things. First, China has the room, both in terms of the time and the policy space, to bring about the rebalancing of its economy over time. And so that, we think, will allow a sort of a move to a perhaps slightly slower but safer growth over the medium term. And then in terms of our allocation within China, we, as I say, remain comfortable with our bank holdings, but we've also changed the focus towards some of the more innovative areas in China. And when you look at the shift in consumption, you can see a shift towards some of the services area, and that I think offers opportunities for us.
What is your outlook on the global economy, and how might that affect Temasek's investments?
So the outlook for the global economy is relatively constructive. So in the US, we're looking for growth to be above trend. In Europe, where growth has been quite strong relative to trend there, it might slow just a touch. Domestic demand may soften just a touch from levels well above trend. But importantly, we would expect it to stay above trend. In China, we would expect growth to slow as the appropriate rebalancing starts to take place. But that's a transition, as I say, to a safer growth, and that's something that we think would actually be a positive. And that generally constructive backdrop is also good news for emerging markets. And so as a result of all of that, what we have seen is an improvement in the earnings outlook, both the actual earnings of the corporate sector and also the market's expectation of future earnings. So all of that makes us quite constructive. But of course, the starting point for valuations is now relatively high. The chance of a slight tightening in global liquidity from very accommodative conditions now, plus the political risks, they all create risks that we would factor into our investment process.
So which sectors are you most interested in at the moment?
Really, since 2011, we've had a bit of a shift in the portfolio towards things like life sciences, agribusiness, technology, the consumer, and so on. And that's something that we would look to continue. And in general, we're trying to invest in businesses that we think would benefit from the longer-term trends that we expect in the years ahead.